You've worked hard your whole life, paid off your house, raised your kids, maybe even helped a few grandkids. You've diligently saved, planned for retirement, and envisioned those golden years filled with relaxation and freedom. But then out of nowhere, a curveball. You or your spouse all of a sudden needs round-the-clock care. And I'm talking about getting bathed, getting dressed, meal prep, managing medications. The basic activities of daily living are the ones that we often take for granted. But suddenly you need them and you're staring at a $90,000 per year bill. And that's just the average today. And you realize Medicare doesn't cover it. Your savings aren't enough. And your family, they're not ready, nor should they be solely responsible for this immense burden. And now you're asking the questions that millions of Americans never think about until it's too late. Who's gonna take care of me? And more importantly, who's gonna pay for it? And that's why we're here, to demystify long-term care insurance, explain what it covers, how it actually works, and why this is often overlooked. It's a financial tool that matters way more than you think. Welcome to the Banking Bros channel, where we empower you with the financial knowledge to live your best life and get that code-cracking cash flow. Today we're tackling a topic that many shy away from, but one that's absolutely critical for your financial future and peace of mind: long-term care insurance. Let's define it first. Long-term care is not actually just nursing homes. That is a super common misconception that actually we hear all the time. It's truly about providing daily support with basic living tasks. And I'm talking eating, bathing, using the bathroom, getting dressed, even managing continence care. This crucial assistance is not confined to a single type of facility, so you can get this care right at your house, at home, allowing you to age in place. You can also, if you want to, go to an assisted living facility, which offers a balance of independence, right, and support. Or yes, you can go to like a skilled nursing home, where even more normally intense medical care is kind of required. The key takeaway here is that long-term care encompasses a broad spectrum of services designed to help you maintain a quality of life when you can no longer perform these daily activities independently. And the need for this care, it doesn't always come from a catastrophic injury or a sudden dramatic event. More often it can be a gradual decline, like the progression of dementia, the increasing limitations from severe arthritis, or simply the cumulative effects of aging on our physical and cognitive abilities. The statistics are eye-opening. Nearly 70% of people over the age of 65 will need some form of long-term care at some point in their lives. This isn't a niche concern. It's a widespread reality for most American families. To truly understand the landscape of long-term care today, a quick history lesson is essential. And the truth is, long-term care costs didn't always bankrupt people. If we look back like to the early 1900s, multi-generational households were the norm across America. And what I mean is, grandma lives in the guest room, right? Or perhaps a small cottage on the property. Kids and extended family members naturally pitch in. You provide care and support as loved ones age. It's a community effort woven into the fabric of daily life. But modern life has so much increased mobility. You've got smaller family sizes and geographical dispersion. Everybody leaves, right? And it's really fundamentally changed that traditional model. By the 1970s, we saw an explosion in institutional care facilities. The nuclear family structure, coupled with advances in medical science that prolonged life, meant that more people needed care, but fewer family members were readily available to provide it. This is also when government programs entered the picture. Medicare came along in 1965, a landmark achievement in healthcare access, but it was designed to cover short-term, medically necessary skilled care, such as recovery from surgery, not ongoing assistance with daily living. Then there's Medicaid. Intended as a safety net for the poor, the challenge with Medicaid for long-term care is to qualify. You often have to spend down your assets near the poverty levels, which literally means liquidating everything you worked so hard to accumulate and build. And that leaves many middle-class families in a very difficult position. You're either caught right in between super high costs because you have to pay for it, or really strict eligibility rules, which means you need to sell things. Okay, so with that context in mind, let's get into some of the specifics. What in the world does long-term care insurance actually cover? And this is where the true value becomes clear. A comprehensive policy typically provides financial benefits for a huge range of services. And I'm talking home health care, skilled professionals, or aides that can come directly to your residence to assist with those daily tasks, help with medications. It doesn't even matter if you have light medical needs are heavy, it doesn't matter. It can cover assisted living facility costs, which of course they offer really supportive environments with communal meals and social activities, right? You've seen the movies, they play bingo in there, you know? The care available that you need as you need it. And yes, it does cover nursing home care for those who need 24/7 really skilled direct nurses and medical supervision. You may also find coverage for adult daycare services, which offer a safe and engaging environment during the day for individuals who require supervision, providing respite for family caregivers. Some policies even include care coordination services, which can be invaluable in navigating the complex world of care providers, and occasionally even home modifications, such as installing ramps or grab bars to make your home safer and more accessible. And that means if you want to age at home with dignity, surrounded by family comforts, then the insurance will pay for that too. It's not just worst case end of life scenarios where you're institutionalized and that's the only option. People say that, but that's just not how it works. Many people assume long-term care insurance is only for nursing homes. However, the reality is that a significant portion of claims are for in-home care or assisted living, reflecting people's strong preference for maintaining their independence and staying in their communities for as long as possible. Data from the American Association for Long-Term Care Insurance shows that over 43% of long-term care insurance benefits are used for home care expenses. Exactly. In fact, most people use long-term care insurance to stay out of a nursing home because it provides financial flexibility to choose the setting that best suits your needs and your preferences. It gives you control over the whole journey. So here's the mechanics, the nuts and bolts of how these policies operate. Just like you pay premiums for auto insurance or life insurance, you pay regular premiums for long-term care coverage. These premiums are typically paid for a set number of years or until you activate the policy. If and when you need care later in life, the policy pays out a daily or monthly benefit to cover those eligible long-term care expenses. This benefit amount is determined when you purchase the policy, and it's designed to cover a significant portion of your care costs. Yeah, there's usually what's called an elimination period. Think of it kind of like a deductible, but days, not money. So there's a waiting period. It's typically 30, 60, or 90 days. And during the waiting period, you're responsible for the cost of care. Then the policy kicks in. Now, if you choose a longer elimination period, then sometimes it lowers the cost, but it also means you'll bear more of the initial costs, out of pocket. You have to pay for it. So it's a trade-off, and you have to consider your own financial comfort level. And policies have benefit caps, both in terms of daily or monthly maximum payout and a total lifetime benefit in most cases. For example, a policy might pay $200 a day for a maximum of 3 years, or up to $300,000 over your lifetime. If your care costs exceed that daily or monthly maximum, or your care extends beyond total benefits, then those additional expenses would be out of pocket unless you have the riders. That's why understanding these limits is crucial when you're selecting a policy. Yeah, let's not sugarcoat it. It is incredibly valuable, but long-term care insurance is not magic. It's not a magic bullet. It does not cover every single expense, right? Usually it's not going to cover medical procedures or hospital stays. That's health insurance. Most people realize that. It also is not going to cover prescriptions, which again is usually separate coverage for medications. Furthermore, it's typically going to exclude cosmetic services or spa style amenities within the facility, right? Long-term care insurance focuses strictly on medically necessary or just activities of daily living support. That stuff I mentioned earlier, bathing and dressing and eating and getting up and down, that stuff. And most importantly, while family members often provide invaluable kind of informal care, the policy generally doesn't reimburse care for family unless they're formally hired or they're licensed caregivers and stuff like that. If they are, it will pay for them. And a significant consideration for many is the cost of premiums. They can be expensive, especially if you wait until you're in your 60s or you have pre-existing health conditions that increase your risk profile. The younger and healthier you are when you apply, the lower your premiums will be. This highlights the importance of proactive planning rather than waiting until a crisis hits. There are essentially 3 main approaches to long-term care coverage available in the market today, and I'll walk through them, highlighting unique characteristics. First, you've got traditional long-term care insurance. This is pure coverage. It's designed solely for long-term care expenses. If you don't need long-term care, the premiums that you paid are lost. It's essentially use it or lose it. It's often a lot cheaper up front compared to some of the other options, but there's then the possibility that your premiums increase over time, you don't use it, right? It just depends on the policy terms and the company that you've used. That's very similar to like a car insurance. You pay for it. If you need it, it's there, but if you don't need it, you've just lost all the money. Then these are becoming increasingly popular. We have hybrid policies or asset care, which combines the life insurance with the long-term care benefits. These are fantastic because they address a common concern. What if I pay all these premiums and never need long-term care? With a hybrid policy, if you don't use the long-term care benefits, your heirs will still receive a death benefit, providing financial protection for your loved ones. You can often pay for these policies with a single lump sum premium or through the installments over a set period, and the premiums are frequently guaranteed, offering more predictability. They don't go up in cost. They are typically more expensive than traditional LTC policies, but they offer a dual purpose benefit, covering both potential care needs and legacy planning. And finally, this is where our save and spend system comes in and shines. There's long-term care options, or they call them riders, on life insurance policies. And this is not a separate policy, but it's an add-on to properly structured whole life insurance. And it allows you to access a portion of that death benefit while you're alive to cover the long-term care expenses. It works very similarly to a policy loan, right? You draw from your cash value, but it's specifically designated for long-term care. The beauty here is that the money that you've put in the policy continues to grow. It continues to compound over time, and you retain control over all the funds. I think this approach offers incredible flexibility and allows your money to serve multiple purposes throughout your life, not just for a single contingency. Now let's get down to the sobering numbers that make this discussion so urgent. The average national cost in 2025 for a full-time private room in a nursing home is estimated to be around $127,750 per year. For assisted living, which provides more independence, you're looking at approximately $70,800. And in-home care, while it offers comfort and familiarity, at over $33 per hour for a home healthcare aide, those costs add up pretty quickly, often exceeding $75,000 annually if extensive hours are needed. And here's the scary part, the part that truly underscores the urgency of planning. These costs are not just high, they are rising significantly faster than the general inflation rate. We're seeing annual increases for some of these services jumping by as much as 10% a year. This means that the costs that we just told you today, the costs that you see today when you Google it, will be substantially higher by the time that you actually need the care. Which means relying solely on your 401k or expecting to tap into your home equity when the time comes, it just might not cut it. Without a specific plan, these escalating costs can quickly decimate even substantial retirement savings, leaving little to no legacy for your family. So with all this information, here's the big question. When should you get long-term care insurance? And who is it most essential for? If you are in your prime earning years, I'm gonna say between 35 years old and 55 years old. This is the optimal time. You're typically healthier, you're making it easy to qualify for the coverage, you can lock in significantly lower premiums, and they'll remain affordable over the long term. If you've got a family history of chronic illness, especially Alzheimer's or dementia, I don't know, arthritis, like, deliberating arthritis where you can't move, you should strongly consider getting this insurance. Your genetics can significantly increase your likelihood of needing care. If you're single or your spouse has health issues that might prevent them from being a primary caregiver, then you need to get long-term care insurance. It's critical. You won't have built-in support, kind of informally. And let's consider the impact on your loved ones. If you're a parent planning to pass on wealth, you don't want your kids forced to choose between caring for you, which is an enormous physical, emotional, and financial drain, or having to drain your meticulously built legacy to cover your care costs. Long-term care insurance protects not just your needs, but also your family from that immense burden, ensuring your hard-earned wealth can indeed be passed on as you intended, not consumed by care expenses. So let's talk strategy now. You already know we advocate for and teach the save and spend system. Here's why it fits beautifully and seamlessly with long-term care planning, providing a truly robust solution for your needs. When you structure a properly designed whole life policy as part of your save and spend system, you get several powerful advantages working in your favor. You gain guaranteed cash value growth, meaning your money is consistently growing within the policy tax advantaged. You have substantial death benefit that provides for you and your loved ones, but crucially, the death benefit can also be accelerated, given to you early, to cover long-term care insurances as the need arises. You've also going to have access to those funds, my favorite part, through policy loans if you ever need extra care or you want to bridge the elimination period. And perhaps most importantly, you maintain control over your policy and your money. Even if your job changes, even if you move across the country or to a different country, man, even if your health status shifts, your policy remains yours. It's a flexible financial asset. I think it's so important. You don't wait to use it, like traditional long-term care insurance, where premiums disappear if care isn't needed. With this approach, your money works for you the whole time, building wealth and providing liquidity, while simultaneously offering that crucial long-term care protection. And your care options? They remain entirely in your control, giving you the power to choose the best path for yourself rather than being forced into a situation dictated by dwindling resources or limited government programs. Ultimately, this isn't really just about insurance, and our channel's not really just about insurance. It's about so much more than just a financial product. It's about dignity, it's about process, it's about the later years of your life, making sure that you've got guaranteed results. It's about having choice. It's about power to decide when and where and how you receive care, rather than being limited by just money. And profoundly, it's about protecting your family, shielding them from the immense financial and emotional stress that caregiving can impose. I've seen firsthand the toll that it can take on a family that's just unprepared. Nobody really wants to think about getting older, about potentially being unable to care for themselves. It's a natural inclination to put off these difficult conversations. But doing nothing, pretending it won't happen, or hoping for the best, that's not a plan, that's a gamble. And that gamble, when it comes to long-term care, is the most expensive choice of all, not just in dollars, but in peace of mind for you and your loved ones. If you want a real plan, one that covers long-term care, provides for your loved ones, and gives you options while you're alive and well, then the next step is pretty simple. Click the link in the description of this video and book a call. Right? We want to talk with you, and we'll just walk you through what your options are and what you're considering and how we can help. We'll help you assess your unique situation, understand your options, and build a strategic plan using the Save and Spend system that not only protects your future lifestyle, but also safeguards your hard-earned legacy for generations to come. You've got to click the link in the description. Hit that like button on this video if it opened your eyes to a new perspective. And of course, subscribe to our channel, right? The Banking Bros channel. You can get way more actionable financial strategies that actually work in the real world. We're the Banking Bros. We're here to make finance simple, strategic, and built for real life.